Your tax refund might be lower this year than you expected. The IRS says early numbers show the average refund is down 8% this year compared to last. It's about $170. Our Heidi Wigdahl spoke to an expert to find out why.
Tax season is here, and if you were expecting a big refund, you might be disappointed.
Tax refunds for a lot of people, we're finding out, are actually lower than expected.
Steve Warren, a senior tax manager with Schechter, Dock & Cantor in Minneapolis, says that doesn't necessarily mean you're getting less overall. It's the first tax season with President Trump's new tax plan.
The government automatically adjusted the tax tables for withholding, and they did it because there was a reduction in tax rates, increased standard deduction, so there was speculation that people would have a lower tax bill overall.
Warren says those lower withholdings meant more money in your paychecks throughout the year, but now you might have a lower refund or actually owe taxes. The Tax Cuts and Jobs Act also nearly doubled the standard deduction for 2018. For married couples filing jointly, it's $24,000.
You either take a standard deduction, or if higher, you take all of the deductions like charity, real estate taxes, and things like that, and you take the higher of the two. There were a lot of changes, though, that are going to make it harder to reach that threshold.
And certain deductions have new limits.
Taxes are now capped at $10,000. So you take your real estate taxes, your state income taxes, your auto tabs, however much it ends up being, where before you could deduct all of it, now it's capped at 10. So a lot of people are going to be taking the standard deduction who used to itemize.
Warren says things like this affect people in high tax states like Minnesota more than those who live in low tax states. He also says people seeing the most changes are real estate and business owners. But it gets more complicated for everyone in Minnesota because the state did not conform with the federal tax laws.
What they're doing for 2018 only is allowing taxpayers to take the standard deduction on their federal return, but still itemize their deductions on their Minnesota income tax return.
If you haven't filed yet and you're looking to save money, Warren says you can still do these things through the middle of April.
Contribute to a health savings account, a deductible IRA, or maybe a retirement plan like a SEP IRA or a simple IRA for a business. All those things can still be done to reduce your taxes on your 2018 income tax return.
And if you're not happy with your refund, Warren says change your withholdings. The CPA can do a tax projection, or the IRS has an online calculator. As far as this tax season, Warren says they still have questions.
Just last month, they gave us the final, quote-unquote, final regulations. There's already been an IRS notice correcting the final regulations, and we expect more guidance still to come out as the year goes on to let us know how some things work, where it's really not totally clear today.
Heidi Wigdahl, KARE11 News.